Good morning. Welcome to this new session of the webinar, Avoiding Errors in Declaring Personnel Costs in Horizon 2020 Grants. My name is Manuel Romaris. I'm Training Coordinator for Horizon 2020 and Horizon Europe. And today I will drive you through the different sections of this webinar. We'll have first two presentations, one from a legal colleague, David Mejuto, and another from an auditor, both working at the Commission. The auditor is Sorin Serban. That's a recorded session, so you have seen it probably before. It was recorded in a previous session of this webinar, but afterwards we have more than 1 hour of questions, and that will be live questions. We have already here one of our colleagues from the legal department, and that's Isabelle Leroy. And afterwards, we'll have also Sorin Serban, who will be here, I think, remotely through Teams, actually answering to your questions live. You can, from right now already, ask questions. We will use for that Slido, and there is a code in Slido. In the page you will see that there is a QR, and in addition there is a code that is COSTS 2020, COSTS 2020. Please have a look at the questions that are already there, and if there is a similar question to yours, just like it, and at the very end we will go through these questions by order of likes. So, nothing from my side at this moment. We'll see you again in 45 minutes. That's the two presentations that we are going to watch now. The first one, again, David Mejuto, a lawyer from the Common Implementation Center at the DG Research, Directorate General for Research and Innovation of the European Commission. And the second one, an auditor, Sorin Serban, also from the Common Implementation Center at the European Commission. We can see the video now.
In Horizon 2020. It is not today's intention to go through every single small little item of the personnel cost. That will take us probably more than the triple of the time that Manuel have indicated, but to concentrate really on the main aspects to avoid that you may fall into errors when preparing your cost declarations for Horizon 2020. Actually, this morning I was updating my paper copy of the annotated model grant agreement. If you don't know why it is, don't worry, we will speak more about it in a few minutes. And I have realized that the explanations for the personnel cost takes something like about 30 pages in the annotated model grant agreement. You may say that is a lot. But if you compare it with the 300 and nearly 80 pages that the full explanations on the Horizon 2020 grant agreement takes within this annotated model grant agreement, and if you think that probably around 3/4 of the cost and nearly as much of the errors in Horizon 2020 grants are concentrated into the personnel cost, probably these 30 pages, even if it take a while to read them through, are not that big and not that much of an effort. But in any case, today, as I was saying, I'm going to concentrate on the typical issues that might raise mistakes when you are preparing your cost declarations concerning personnel costs in Horizon 2020. Let's see if we do it right. First indication. Well, if you are today or in a near future connected to this webinar or refreshing your memories of it, it's probably because you have an Horizon 2020 grant agreement ongoing. Well, the Horizon 2020 program, as you can see in the slide, ran it from 2014 until 2020. But it doesn't mean that it's over. That was the time when the program finished. But we still have grant agreements to sign, and for the next year, you will be implementing the grant agreements that you have signed until the end of the program. The message now is that remember that whatever we are going to explain today to you about Horizon 2020 does not apply to Horizon Europe. As Manuel explained it, you already have available some other presentations about Horizon Europe, and very soon we will concentrate on explaining what are the cost conditions, the reporting obligations, etc., for Horizon Europe in a wave of other webinars. today is Horizon 2020, and also if incidentally you still have alive any FP7 program, the same logic applies. So what I'm going to tell you today about personnel costs does not concern FP7, does not concern Horizon Europe, it's only Horizon 2020. And even within Horizon 2020, I must say that I'm not covering everything of it, because we are going to be focusing these explanations on personnel costs in cost reimbursement grant agreements. So where you have to calculate your actual costs in accordance to the rules of the grant agreement. You may know that we have other types of grants, like the lump sum grants, which is just a fixed amount. So there you don't have to calculate how to declare your costs during the reporting, or like the Maria Sklodowska-Curie Action grants, where it's a unit cost, it's a fixed amount that becomes already determined in the grant agreement, and you just use that fixed amount. So there are no complications and there are no these financial mistakes. That's the reason why today we are only working concentrated on the personnel costs in cost reimbursement grants. So the first element about personnel costs is, well, who can I declare as personnel costs in my cost declarations for Horizon 2020 grant agreements? Well, I think that the first indent is the most logic. Of course, your employees are your personnel costs. There are no doubts there. Employees, by the way, also means if you are attending this webinar from a public entity, when we say employees, it also means public servants, civil servants, sorry. So these two categories are automatically included in the personnel costs. But you can also declare as your personnel costs seconded staff. For instance, if a professor comes from a different university to work for you, if you are a university into the project, you can also declare the cost of this person as your personnel cost, even if you don't pay directly this person. On top of it, if you are an SME, a small and medium-sized enterprise, and if the SME owner is participating in the project but is not an employee of the SME, so he or she does not have a salary from the SME, you can also declare the cost of these persons as your personnel cost. And finally, but this is subject to conditions, you might also be able to declare as your personnel cost the cost of other persons that work for you, but that are not your employees. This is the case, for example, of some types of consultants. We will have a few words more on this in the next slides. And this is personnel costs in Horizon 2020. You may think that it's horribly complex. It is, in any case, quite a dense tree of options. That's true. The reason for it is that we have had to adequate the Horizon 2020 grant agreement to the many different options and situations that take place around Europe. So the biggest difficulty when calculating your personnel costs in Horizon 2020 is probably to find your way within this tree of different options. To simplify this task, we have already marked there for you what we consider to be the easiest way to calculate them. It doesn't mean that you must go down that line. You may take the other options. You will see a bit more of information about these different options in the next slides, but I will, through the other slides, all the time address you to what we consider and has proven to be the less error-prone of the options within this tree to calculate the personnel cost. So don't be scared. It might look difficult, but it's because you are looking at every single possible way that you may have to calculate personnel costs. And at the basis, it's extremely simple. The logic that you can easily follow is that the personnel costs in Horizon 2020 are calculated simply by multiply the number of hours that the person worked in the project, in the Horizon 2020 action. And for these unit time records, I'm going to insist several times on this, by an hourly rate, so X euros per hour. And you don't need to invent a formula for the hourly rate. It also comes within the grant agreement. So when you sign the grant agreement, in the text of the grant agreement, the explanations about how to calculate this hourly rate are already there, clearly detailed. And beyond that, you also have the detailed explanations, developments, and examples about this calculation in the annotated model grant agreement. I will keep on repeating this annotated model grant agreement several times. I will give you the link at the end in case that you don't know it. So hours worked in the project multiplied by an hourly rate. Keep this in your mind because we are going to now explain in a bit more of detail these two elements. The first, hours worked in the project. Horizon 2020, you need timesheets. You need timesheets, you need timesheets. Keep this in mind. We will keep it repeating. It slightly changes in Horizon Europe, but as you have already understand by now, Horizon Europe is going to be a different story. We'll have separate presentations, we'll have different grant agreements, so it does not concern today our presentation. Horizon 2020, you need time records. There is one exception for persons working exclusively in the action. You can read about that in the annotated grant agreement. By default, keep in mind timesheets. And you don't need to record all your hours. You just need to record the hours that the person works in the Horizon 2020 action. So it's not that we are imposing you something beyond what is necessary to calculate the personal cost. And there, in your timesheets, you cannot declare budgeted time. So it's irrelevant if at the beginning you estimated that the person will work 3 months in the project and eventually you needed 6. You cannot declare the budgeted time. You must declare the reality of the time worked in the action. Similarly, you cannot declare estimated time. So it's not about at the end of the year, well, I think that the person worked 500 hours in the project and I declare these 500 hours. It does not work like that. You cannot declare estimated time. And you cannot declare either, and this happens in some specific contracts, a percentage of the time of the person. So it's not enough to say, well, in the contract of this person, the employment contract, we have put that the person will work 25% of the time in this grant agreement. It's not enough. You need to declare, record, and declare systematically the reality of the time that the person worked in the Horizon 2020 actions. So, once again, and for the last time now, remember that you need, in Horizon 2020, timesheets for the hours declared to the grant. So the other side of the formula is the hourly rate. Now that we know how many hours the person has worked in the action, we need to determine the hourly rate. And it is the grant agreement who tell us, well, you will calculate the hourly rate by simply dividing the personal cost of the person by the number of productive hours. What you can put in the personal cost, you're looking there on the slide, is the real salary of the person, the social security contribution, taxes, and other costs that are included in the remuneration of the person that arise from national law or the employment contract. Okay? Be very careful about things like gifts or bonuses that are given not based on objective conditions, premiums, that might be delicate and in many cases might not be eligible. So keep in mind that these are the elements that you can put within the calculation of the hourly rate in the personal cost. Then we need to divide this personal cost by the number of productive hours. And you remember the trick with all the options? Well, there are 3 options for the number of productive hours. The first option, the one that we recommend, the simplest, the less risky, is 1720, so 1,720 hours per year. It doesn't matter in reality if the person actually works more hours in total than the 1720 or less hours than the 1720 in total. You can always use 1720. If the person works part-time, you will do a pro rata corresponding to the part-time. If the person is employed just for 6 months, it's going to be just half of this 1720, so also a pro rata of this 1720. But any beneficiary, any one of you can use the 1720 hours to calculate the hourly rate of the person to charge the cost to the Horizon 2020 grant agreements. It might be possible that you don't like it, for instance, because you already have your own methods to calculate annual productive hours. You're a big company or a big institution, and you have cost accounts, and you yourself said, well, yeah, I'm already doing this my way, and want to keep this system. For that is the standard. You see this option that is in your left bottom corner of the slide. And you also can calculate it person per person, taking into account the number of hours that the individual person worked during the year. We put this two options there are also open. They are subject to conditions. If you don't like or you prefer not to use the 1720, please check carefully how and under what conditions you can use one of the other two options. Then the next question is, now I know that I have to multiply the number of hours by an hourly rate. And how many times do I have to do this? How many times do I have to calculate an hourly rate? Well, the main, again, branch in our tree, the main option and the one that is the simplest, and because it is the simplest and the less risky we recommend, is do it once in each financial year. So just once at the end of each financial year, you calculate your hourly rate by dividing the annual personnel cost by the annual productive hours. That's very simple. Normally, you have already these global amounts because of your statutory accounts or because of the tax declaration, so it's very easy. Now, if you want, there is a small downside on this main approach, that is that when at the end of the reporting period, the financial year is still ongoing. For instance, your financial year ends in December and the reporting period ends in March, the year after. You will have to use for these last months, these months of the ongoing financial year, the hourly rate of the previous full financial year, your last closed financial year. So you will not be able to calculate hourly rates for a fraction of a year, which implies that if there is a salary increase at that moment, well, it's not going to be reflected immediately in the hourly rate. It's going to be for the next reporting period when you will see this hourly rate updated, if you want. Well, there are cases in which beneficiaries told us, well, look, this is not my normal way. I want another option, or I'm not happy with this because, okay, the ongoing financial year in your example is 3 months, but it might be 11 months. And if there is a significant increase in the salary, well, we will be able to recuperate more EU funding if we will have different approaches. For instance, this second option that we have allowed now in the Horizon 2020 grant agreements, that is to calculate the hourly rate per month. So rather than doing for each person an hourly rate at the end of the year, you will do 12 hourly rates, one in each month, by dividing the monthly personnel cost by the monthly productive hours. If you go down the line, if you say, well, I indeed prefer, I don't care, it doesn't matter for me all this additional administrative work because of the monthly calculations, I insist 12 rather than 1 in a year, I want to go down the line, again, please check carefully in the annotated model grant agreement the explanations for this monthly hourly rate, because there are some specific conditions that make the calculations in some cases slightly more difficult than the the calculation based on the full financial year, so more prone to errors. The option is there. We recommend you going to the annual because it's simpler, it's simpler, and it implies less administrative burden. But if you want to check the other, if you want to see how it works, the information is available in the annotated model grant agreement. Now, there are 2 ceilings that apply to your personal cost declarations. In reality, the 2 ceilings are based on the principle that the grant agreement, the grant itself, can never result in a profit for you. So we are covering costs, right? So if you are making a profit, we are going beyond what has been your actual cost. That would not be possible. To ensure that we respect this general rule of not making any profit out of the grant, there are a double ceiling on your personal cost declaration. The first side of the ceiling is that you can never declare in a year, in total, in all EU grants together, more hours than the number of hours that you have used to calculate the hourly rate, so the number of the annual productive hours. So if I took option 1, 1720, and I calculated my hourly rate based on the 1720 hours, I can never declare in EU grants in a year, in total, for that person, more than 1720. Even if in reality, for whatever reason, the person working more hours. It is irrelevant, because when you divide by 1720 and multiply by 1720 again, it implies that you have already charged the full personal cost of this person in that year to EU grants. That's the reason why, even if the person works more hours, you have to stop declaring them to EU grants. And immediately related to this, we also have the second condition that it says that the total of the personal costs declared for reimbursement as actual costs in EU and Eurotown grants in a year cannot be higher than the total personal cost for this person in your accounts. So it's the same logic. You cannot make a profit, you can never declare more than the total of the personal cost of the person. After that, you may say, well, still it looks rather complex, and there is a lot of math to make these calculations, and there are the ceilings and the options, and I'm a bit scared of making mistakes and having to pay back later on. That's dangerous. Well, what we have done to help you in that situation, or for instance, it also happens that you are just a one-time participation in Horizon 2020, and you are worried that you might be missing some elements. We have prepared a wizard, so an IT tool to support the calculations that verifies automatically this double ceiling and helps you through your choices. You have there the entry point to this wizard tool, which is available at the time of your reporting, so the financial reports, okay? You see there this magic one which will give you the access to the wizard, which is not mandatory. You may use it, you may not use it, it's your choice. It's available for you. We have done it to help you with the calculations and all the conditions, but if you prefer to do it yourself on your way, on your own, not on your way, the way is the one in the grant agreement, that's fine. But if you want, the possibility is there. Now, to wrap up my part of the presentation today, we are going to tackle a few special cases with a couple of key messages. So let's imagine that you are in a situation. Here we have two persons. One is representing our side, one is representing your side. And you say, well, look, I want to pay more to my employees than the normal salary when they work in this prestigious grant. Our reply will be, well, if the only moment in which, and the only occasion in which you do that is when participating in Horizon 2020 or even in European Union grants, we cannot accept it because we want to contribute to your cause in the normal way that you do it. So paying the normal remuneration, participating to your normal policies, travels, etc. So if it is just for us, it's not possible, okay? We will just cover up to the normal basic salary. It can be, however, that you reply, but the thing is that I always do this when it is a prestigious grant. So my internal rules go into saying that when there is an important prestigious grant, we will pay more to the person. Well then, and this is the message, it might be possible. We call this project-based remuneration, but there are specific rules that you need to apply. And if there is something that we unfortunately have to recognize that is somehow complex about Horizon 2020, is this project-based remuneration. So don't be surprised, don't be scared, but if you are in this situation, here really I must insist that you check very carefully what are the explanations in the annotated model grant agreement, and remember that you can always contact us. I will tell you how in a couple of slides in case of doubts. Two other specific cases. Remember that I explained to you that it was possible to declare as personal cost the cost of the SME owner, so the owner of an SME who is the beneficiary, the SME the beneficiary in the grant agreement. If this owner is not an employee, in some countries it's not possible to be an employee of your own company. So if this owner is not employee but participates in the grant agreement, so works directly in the grant agreement, in the action, in the project itself, we accept that the time of this SME owner is valorized and can be charged to the Horizon 2020 action via what we call a unit cost, which actually is an hourly rate that is fixed by the Commission and that will appear directly in your grant agreement. The difference, I insist, is if it is an employee, it follows the same logic that all the other employees. If it is an SME that is an SME owner that is not an employee, then you have this unit cost even if the person is paid by any other means, including service contracts or whatever non-employment contracts. In those situations, it's always the SME owner unit cost that applies. And finally, the last special case that I wanted to name here is the case of consultants. Remember that, as said in the second slide, that in many cases, or in some cases, you can also charge as your personal cost people who works in the project but are not your employees. They are working to you via other type of contracts, service contract typically, or any other type of labor contract, but not employment one. Well, this is possible, but it's not always, and it's not systematic. It's not because you hire a consultant on personal basis that you can declare the cost of the person as your personal cost. So here, please check the Article 6282 and the explanations in the annotated model grant agreement, because even if very often they can still be declared as personal costs, there are some cases and some circumstances under which you will have to declare them as subcontractors, worst scenario, or purchase of services. So if you have this type of consultants, be careful, check it carefully, do it right from the beginning. Don't wait for an auditor to correct you and recover the money. So this is going to be my last slide, and it is about where you can find more information about everything that I have explained and many more issues that today we didn't have the time to get into details. First message, you have heard me speaking several times about this Horizon 2020 annotated grant agreement. This is really the book where everything is explained. Whenever we have questions, we use exactly this information to reply to your questions. So same document for you, same document for us. It's full of examples, detailed explanations, and it also contains the articles, so the parts of the grant agreement to which the explanations refer. It is available through the portal, and you have a direct link here in the slide. More in detail, if you want to go into details about the practical implementation, the procedures, etc., so beyond the legal provisions of the grant agreement, you have the Horizon 2020 online manual, also available through the portal, and here with the link that is in the slide. And it might be perfectly possible that after reading, it's still not clear one element or another aspect, and you want more information. It also happens to me. In that case, you can first of all contact your national contact points. These are people who is specifically dedicated in your country to reply to questions about Horizon 2020. They know your language, they speak your language, they know your particularities, and they are particularly knowledgeable about certain aspects of Horizon 2020. Your national contact points, the contact details are available also in the portal. So through this link also, and at the end, you have also the possibility to contact us directly, the Commission directly, via the Research Inquiry Service, where you can submit your question, your specific question is going to get arriving to me, my colleagues, sorry, depending of the area to which the question refers, and you will get a written answer by email directly from the Commission. And this is it. I stop here with this part of the presentation. I will pass the floor now to my colleague Soren, who will speak about the audit dimension of Horizon 2020, and we will have plenty of time at the end to reply to your questions. Thank you very much. See you later.
I hope you can hear me. I will quickly present to you the audit perspective, let's say, for Horizon 2020 grants. What we see in practice and so on. But first of all, we'll go to some introduction and to speak about the errors. What do they occur? Why do they occur? Of course, misunderstanding of the rules. That's the part where David kindly presented to you the bigger tickets. And then, of course, lack of attention to the detail of the provisions of the grant agreements. And there, I really recommend you to go through the annotated grant agreement, read carefully, and really pay attention to the details or to the specificities you are looking for, because there are many guidelines included. And of course, intentionality as well, that can explain why some errors can occur. The consequences of error are, of course, negative ones for beneficiaries. This can be the non-optimal use of funding available, and this may lead as well to recoveries, of course. Not only for beneficiaries, for the European Commission services as well, the scrutiny that the European Court of Auditors can scrutinize the budgetary authority in charge of the Horizon 2020 actions. There could be an increased error rate as well, of course, an increased ex post audit efforts to detect such errors, and eventual corrective measures that may be applied. So this in a nutshell to speak about the consequences of errors and why we would like to avoid them, of course. Now, quickly, just to give you an idea about how the error rate is calculated, basically, from the audits that we are performing, from the population of paid Horizon 2020 grants, we are taking a sample and we calculate an error rate based on a simple calculation. Basically, we are summing up the negative adjustments from the audits, and we are dividing this by the sum of the audited amounts. The assurance elements of the audit, the main purpose of an audit is to provide assurance. Now, the assurance elements are used to assess the legality and regularity of Horizon 2020 project payments, and to also calculate a so-called residual error rate. Basically, the residual error rate is the, let's say, remaining error not detected within the audit. And the point that the objective is to keep this residual error rate at an acceptable level. The general control objective of the control strategy is to get the residual error rate as close as possible to 2%, without necessarily expecting it to get under 2%, of course. The main detected errors, so now we're trying to, I will present to you in the slides the main detected errors during the audits that we carried out for Horizon 2020 actions. Are for personal cost especially, they are due to mainly first of all, incorrect productive hours calculation. Basically, I think we have a slide later on about this, but this is referring basically to the three options to calculate productive hours and to the correct application, especially of the second option and third one, meaning the individual productive hours or the standard productive hours, which have some conditions to respect. So therefore, either the conditions are not entirely respected, or the errors refer especially to these conditions to be respected. The option one, obviously, it could be used, so we have less errors there. Regarding remuneration cost, we may have incorrect remuneration cost, like, for example, estimated cost or budgeted cost, which may indeed explain some of the errors in personnel cost. The other part is incorrect time working on the action claimed. Obviously, this is linked directly with the timesheets. And of course, all the elements explained by David, my colleague David, earlier about the timesheets should obviously be taken into account, because this may lead to errors if this is not the case. And of course, unreliable or missing timesheets, this may lead to rejection of cost or to calculation of adjustments by the auditors. Just to make sure that the personal cost is correct, so how to tackle these errors? For the personal cost calculation, the method to calculate personal cost is to multiply the hours worked coming from the timesheets with the total of personal cost, basically basic salary, social security contributions, and add-ons, to the total productive hours obtained by using the options explained earlier, 1, 2, and 3, basically fixed number of hours, individual productive hours, or standard productive hours. This second part of the equation is called the hourly rate, and basically for the personal cost, or for the upper part, we would advise to make sure that the time recording system, this is for the, first of all, sorry, for the number of hours, some advices from an audit perspective. So we will advise you to make sure that the time recording system is consistent with the human resources records, probably dated and signed, not in excess of your full-time employment, and this has to do, of course, with double sealing, with the respect of double sealing, explained earlier by my colleague, and of course to have sufficient, to have the time recording sufficient in terms of information. And here you have, of course, the necessary information in the annotated grant agreement with the minimum conditions that could be included in the timesheets. For the numerator part now, for the personal cost that you can include to calculate the hourly rate, the eligible personal cost may include, as I was saying earlier as well, the brute salaries, the gross salaries, the social security contributions, the employers and employees contribution. So obviously the employees contribution is included in the gross salary. I will not enter into these details, but both of them are eligible. And taxes and other costs included in the remuneration if they arise from national law or employment contract. So these are the eligibility rules. Now, what they should not include is any ineligible item. There is a specific article, namely 6.5, which details all these ineligible items, majority of them. And any cost included in other budget cost category, obviously like indirect cost or subcontracting or travel cost, etc., should not be included again in personnel costs. So I think this is very obvious. For the denominator, so for the down part of the equation to calculate the hourly rate, the advice, as my colleague said as well, is to really use the option 1,720 hours. This has the less, let's say, has, let's say, the less possibility to make errors. Yeah, it's one fixed amount, you can use it, and the possibility to make errors is lower. Now, if you can use this option, if the employment contract does not specify the working time or conditions, or if the annual workable hours cannot be determined also. So you may have some specificities here. If you have those specificities, you may use also this option in addition. For individual annual productive hours, so this is this option 2 to calculate productive hours, basically the formula should be used, the formula which is well explained in the annotated grant agreement. So to calculate this annual individual productive hours by first calculating the annual workable hours and deducting, of course, absences and adding also overtime. For the standard annual productive hours, these should be, so here we have conditions obviously for option 2 and 3. We don't have all the conditions on the slide, but basically, please, if there are specificities to pay attention to are those conditions where we can use this. For example, individual and productive hours cannot be used in certain conditions and in certain circumstances and so on. For standard annual productive hours, this should be, that's one of the conditions, according to the beneficiary's usual cost accounting practices. And of course, the minimum threshold of 90% should be respected, meaning the annual productive hours are at least 90% of the standard annual workable hours. Basically, by taking out the absences and overtime, this will not be more than 10%. Now, some further advices on how to avoid errors. You can make sure that the time charged to the project is correct. Basically, all the hours that you use to calculate the personnel cost are exactly the same as what you have in your timesheets or in the time recording system, if it's an IT one. You may be amazed, we still find many differences in the time charged in audits. Time records, the second advice is that time records that you use meet the grant agreement's conditions. Basically, you have the name of the person working, the signature of the person, signature of the supervisor, etc. The number of hours, obviously, very important, worked on the project. And in the remuneration, the numerator is correct. As explained earlier, you do not include ineligible items. You only include those elements that come from the labor agreement, etc., labor contract. And then for the down part of the calculation, productive hours in the denominator are correct, meaning either you use simply option 1 and then there is nothing else to check further, or if you use option 2 or 3, you will make sure that the conditions to use these options are fulfilled. Furthermore, personal cost formula reconciles, meaning there are no arithmetical errors still in the formulas. This may happen, this still happens, although with using IT tools, this is less and less the case, but we may still find errors there. And that transaction listing reconciles. Here, given the fact that often beneficiaries are taking extracts, what we call breakdown of cost, extracts of cost from the accounting system or project accounting system to declare this in the financial statements for Horizon 2020, there could be, let's say, some rows that are not taken properly or errors still that may happen there. Employment contracts are in place for employees, obviously. For the other type of personnel, we're not talking here because we are more focusing on personal costs, but basically for employment contracts, if you are declaring personal cost as for employees, you should make sure that the employment contracts are in place, of course. Also for the audit, and this you will receive anyway a list of documents to prepare for the audit in advance. And one last part, basically here, exchange rate, to ensure that the exchange rate is stipulated by the Horizon 2020 grant agreement is calculated, because you have to use a specific exchange rate. Of course, before you press the button, you do all these final checks. Now, this is only several hints and advices from an auditor's point of view. Of course, there are many more details that we see but this is to only give you an idea about what are the main elements you can do in order to avoid errors. Some additional info, some of them have already been indicated by my colleague in the previous presentation, but basically we have the Horizon 2020 Indicative Audit Program, where you can go and see what are the main checks, indicative checks that could be done in case of an audit. So there you can also test for your own situations or specific situations, or for the checks that you could do already at your level. Of course, Horizon 2020 online manual, we have a section, a specific section for audit and certifications. Inside, of course, the online manual itself. And the same as in the previous presentation, national contact points or research inquiry service for any other further questions. Thank you very much for your attention.
Thank you, David. Thank you, Sorin. And before going to the questions, I remember that the questions are on slido.com and the code is costs 2020. That's COSTS 2020. Before going there, I would like to remind you that all these webinars are recorded. This webinar is being recorded at this moment. So you will have actually at the top of the web page where you are, there's the agenda with the presentations. There will be the recording immediately after this session. And there are also plenty of supporting documents, among them the annotated model grant agreement that was mentioned in the two presentations before. Actually, all our webinars are recorded. And if you go to the Funding and Tenders portal, under events on the right side of the Funding and Tenders portal, you will see events. All our webinars are there with the recording, presentation, and supporting documents. And each time we prepare a new webinar, it will be under news, just below events. Under news, it will be announced between 3 and 4 weeks in advance. So the questions are already there. There are quite a lot of questions. Dominika Skotovic is managing the questions. So if we can see the question, have a look at the questions on the screen. So far I cannot see them. Here we have. We have, for answering questions, we have two lawyers. David could not be here today, but we have Isabelle Leroy, as you have seen before, and we should have also Sorin Servan on remote, actually, on Teams, connected with us. Yes, I get confirmation that he is already there. So let's go with the first questions. How do you account for long-term sick leave? No productive hours, but we still have to pay the researchers in our payroll. Maybe that's for you, Isabelle.
Yes, good morning. So the answer to this question will depend on the option that you chose for your annual productive hours, if you are calculating the hourly rate per hour, per year, sorry. If you chose the option of a fixed number of annual productive hour, which is 1,720 annual productive hours, then you cannot deduct anything for long-term sick leave, for any type of sick leave. The only leave that you can deduct in this option is parental leave, so there you cannot take it into consideration, as this is a fixed number, and the interest of this option is to have something very simple with always the same number of annual productive hours. If you have chosen one of the two other options, then so the individual annual productive hours, this is based on the productive hours of one individual. So there, indeed, you can take into consideration the sick leaves, so that would then be possible to deduct them. And finally, if you chose the third option, which is for standard annual productive hours, this is based on the standard that you use across your organization or per cost center or per type of employee. So there you can only take into consideration a standard number of leave or sick leave days. So presumably you will not be able to deduct the full amount of the long-term sick leave that is for one person. So that's a sort of summary depending on the option that you chose.
Thank you very much, Isabelle. We can go to the next question. I cannot see it on the screen, but I have here actually Slido. If an internal employee category B attributed to the project leaves the company and we hire a new employee, category C, how we can fix the small salary difference? That's probably for you too also.
What you have to report is actual cost, so the cost that you have really incurred. So you're going to have to declare what corresponds to what you really paid to the first employee and then to the second employee. So for the employee of the whatever category, you will have to do the calculation of an hourly rate for this employee based on the actual cost paid to the employee and using a number of annual productive hours that you will choose among the options. And we'll always recommend as the simpler option the fixed number of 1,720 annual productive hours. And then if you have then another employee in a category C, we just have this aspect that when it's a new employee, you may be in a situation where you have to use the figures of the ongoing year, which is an exception for a new employee when you don't have any amounts for the past year. And maybe what you're worried about with this question is differences compared to what you had put in the budget, which is what you can find in the Annex 2 of your grant agreement. But what you must keep in mind for this is that this Annex 2 is an estimated budget, because of course at the moment when you sign the grant agreement, you have only an idea, which is an estimation, and the budget always has little deviation in the rollout of the project. And so you may have to do a transfer of budget if you have, I understand that the new employee maybe in category C is less expensive. It's not quite clear, but anyway, if you have a little difference in this respect, you can do a budget transfer, and that's part of the flexibility in budget transfer, which is allowed according to the rules in the grant agreement.
Thank you very much. We have now two very similar questions. If the employee is still most of the time in home office, he signs later the timesheets when he is in office, will this cause problems in case of an audit? And the next question is, what are the requirements for electronic signatures of timesheets? Do you want to start with that, and we give it a try also with Sorin?
Yes, I can try. I will start with the first one. So about teleworking, I understand. So normally to be able to telework, you have to have an agreement in place on telework in your organization. And normally the requirement that the timesheets must be signed at least monthly applies. In any case, even if you are teleworking. There has been some flexibility that was allowed during the COVID crisis because many organizations had to switch suddenly to telework, which they had not organized in the past. And so we ensured that there was a bit of flexibility to allow either a signature of the timesheets later or to arrange this via an exchange of emails, which is not what you would normally expect as a proof of normally signed timesheets. But I understand that now that we are quite out of the crisis, the normal requirements for monthly signature of the timesheets would be, and it's now again a requirement. And so you would have to arrange for at least a monthly signature of the timesheets. As for the electronic signature of timesheets, so timesheets have to be on paper, but that can be paper or an electronic system. However, when we say an electronic system, it cannot be any system. I mean, just an Excel sheet will not be something sufficient if you just have written inside the Excel sheet the name of the person. So we have put a list of requirements of what can be done to have an electronic system for timesheets, and this is detailed in the document that we call the Annotated Model Grant Agreement, which is very helpful for this type of detailed requirements. As a sort of summary of the requirements, you would have to have an electronic identity of the person in this system, an auditable log of the transactions done in the system, and a secure process. So that's the sort of summary of the requirements, but you have to make sure that you have a solid system for electronic timesheets. If Sorin, you want to add something, please do.
You are muted, Sorin. Still muted. So,
Can you hear me now?
yeah, perfect. Thank you.
I was saying thank you very much. Nothing to add, indeed, to what Isabel just mentioned. So from an audit perspective, what we will look at is to see that indeed these timesheets were signed even after the COVID crisis. Thank you.
Question. Using the 1720 method, how exactly should I deduct the parental leave? For example, if an employee is on parental leave from January 15 to October 16.
So, in the parental leave from January 15 to October 16. So, so you're using option 1 of 1,720 hours for the year, and then you're going to deduct from that the number of hours that was spent on the parental leave. So you have to calculate how much that is from the January 15th to October 16th, and then you deduct it from the number of annual productive hours. And that's, you can only do that for parental leave, but indeed you can do it. And then just to complement the answer, of course, when you're going to do the calculation of the hourly rate, the actual costs that you will put at the top of your formula will be based on the cost that you actually incurred during that year. So presumably you will have incurred less cost because you can only put the salary that you are actually paid, and during the parental leave is only you can only put there the costs that you actually incurred that are mandatory under your legislation and which were not reimbursed to you by any social or social security authority or local authority.
Thank you very much. So the next question, I think, is for us. when do we plan webinars similar to this one on error rate for Horizon Europe? And actually, we have been thinking about that. The problem we have is that so far there were no audits for Horizon Europe. We have just started Horizon Europe. So once we will have this audit, we will have actually something to base on these webinars, because at this moment the only thing we could do is base it on the audits we have done for Horizon 2020, and that's what we are doing exactly now in these kind of webinars. I don't know if Sorin wants to add something about that.
Thank you, Wendell. No, I think you resume it very well. Indeed, audits are coming always a little bit later. We are auditing paid financial statements, so yeah, you will wait that these financial statements are submitted and paid first. But what I could say already is that many rules remain applicable from Horizon 2020 to Horizon Europe. I know the purpose of this webinar is to say that different framework programs, different rules, indeed, but there is some continuity. So I think many of these replies here can help as well for Horizon Europe. Still, thank you.
Thank you, Sorin. The next question is, when reporting person-month efforts in the Funding and Tenders portal, should partners report one line per work program, work package, a sum of person-month for all employees that work in the work package, or per person per work package?
Well, actually, when it's reporting, it's not exactly the topic here, because I can just explain that person month is a notion that you use not for the calculation of the personal cost that you will report in your financial statement, but it's something that you use for to report to the Commission on the use of resources in your technical report. And it's not, we don't prescribe any method to determine your person month. So that's something that you do according to your usual practices. And how it is done in the technical report, this is not actually my specialty, so I'm not sure exactly how it's done.
Thank you very much. Next question. Personnel paid by other company which works for us in the same conditions as our employees under our full control can be declared personnel or subcontracting?
So it looks like, but it's difficult from the question, that there may be personnel which is seconded by a third party to a beneficiary. So there is a possibility here to declare the costs. So do you have a category under Article 6.2a.3 of the grant agreement for personnel seconded by a third party against payment, which means that the beneficiary paid back the company. So a secondment means indeed that the person is still employed and paid by the third party, but at the full disposal of the beneficiary, and works on the action in this framework. And if you fulfill then these conditions, indeed there could be a secondment, and you can declare, the beneficiary can declare the amount that it paid to the third-party company for this secondment, and only up to declare the cost only up to the costs actually incurred by the third party who is employing the person.
Thank you, Isabel. We have a similar question actually next to this one. I lost it.
I think it's just underneath.
Yeah.
Which are
the differences between in-house consultants and staff provided by a temporary work agency? Not clear in the annotated grant agreement. Can you provide examples?
So I will start with what we do for staff provided by a temporary work agency. Here you have a contract between the beneficiary and the work agency, and then you have this person provided by the work agency. So there is an intermediary, which is a company intermediary between the beneficiary and the person working. So this usually falls under purchase cost for purchases, which is under Article 10, for which you must ensure that you have best value for money when you do this contract for goods. It's a contract for goods or service, and it falls under cost for purchases. Differently, we have a specific category for in-house consultants, which are a natural person that have a direct contract with the beneficiary. So there's no intermediary there, so no temporary work agency. And here, so the in-house consultant will be this natural person that will have a direct contract with the beneficiary. And there is a specific category under the Article 6282 of the grant agreement, but you must make sure that the in-house consultants fulfills the conditions which are listed in this article, which are quite specific, which are notably that these consultants must work in the conditions which are similar to those of an employee, and that's in terms of organization of the work, of the task that it will be doing, of the premises where it will be working, and also that in terms of the remuneration must be similar to those of an employee, and rather a remuneration for the time worked than for outputs. And then this can fall under this specific category of personal costs for in-house consultants, meaning natural person having a direct contract with the beneficiary.
Thank you very much. We can go to the next question.
Maybe Sorin wanted to add?
Sorin,
yes,
sorry.
Thank you.
Excuse me.
I wanted quickly to intervene just for the sake of clarity and be sure that beneficiaries understand. This in the previous question there was needed, so there was, let's say the question was about should we claim this cost as personnel, subcontracting, or in-kind contribution, or how this cost should be claimed. For subcontracting, maybe just to clarify that a subcontractor means they will do part of the work, so this will be mentioned in as part of a work package, so it's more task oriented, let's say. So they're up to beneficiaries to clarify this from the very beginning in the grant preparation, I think, in order to avoid bad surprises during an audit. But also subcontracting cost would follow different eligibility rules compared to personnel cost, just to clarify this aspect. And also, in addition to that, we have this in-kind contribution provided against payment, which could be indeed personnel cost also, among others, but could be other elements as well, like equipment and so on, which follows also additional other eligibility criteria, let's say, under Article 12. So just to clarify this and to be sure that this is clear among the participants. Thank you.
Thank you very much, Sorin. So the next question is from Mariana M. Please give an example of how to count work time equivalent of 215 for people who start to work on 7 March or on 13 October. Thank you.
So here, I think this question is related not to Horizon 2020, but to the next framework program, Horizon Europe, where there is one of the big differences is that under Horizon 2020, you're going to use an hourly rate. And that's why we use for the calculation of the hourly rate mainly this fixed number of annual productive hours, which is 1,720 hours. Whereas in Horizon Europe, it's a daily rate, and we count as a standard number in the formula 215 days per year. So I don't think I should go into this because this, I think, will create more confusion, and this would be more for webinar on Horizon Europe.
Okay, perfect. Thank you very much. Next question. Who can second a staff? Only other public entities?
So no, staff can be seconded by a private or a public entity. So then you have to have a secondment, as I explained before. Is there a transfer of a person who is still working for, who is employed by the private or public entity and paid by this entity, but who is at the disposal of the beneficiary and working on the action. One thing that Sorin sort of hinted to is that when you are in the framework of this secondment, you will consider that it's an in-kind contribution from the third party, which will be this private or public entity, to the beneficiary, and then you have to fulfill certain conditions for eligibility of the cost, notably that this in-kind contribution is indicated in the Annex 1 of your grant agreement, which is the description of the action.
Thank you very much. Next question is what happens if no, they changed the order, sorry. If a person signs the timesheet 6 months later because he was not in the office, will this be rejected during an audit? And that's probably for Sorin.
Manuel. Indeed, what we would expect is that the timesheets are signed monthly and as soon as possible. Now, if there are reasons for which the person in question signed for different reasons the timesheets later, I think in itself this is not something that will give us the, let's say, the arguments to reject the cost. We will look, of course, at the other elements as well, like to see that the time recording system is indeed, or we can consider it reliable. And for this, we will look at obviously the 6 minimum conditions of the timesheets or of the time recording system, if this is electronic, to see if they are fulfilled, and check also some other elements like like they are indicated in the indicative audit program, but also like coherence, let's say, with the absences, with the travel, and so on, with the leaves.
Thank you.
Thank you.
So we have now several questions with 4 likes. Sometimes they are dancing on the screen in the order. What happens if the actual hours worked on the timesheet are significantly lower than the calculated hours in some months? You want to give it a try?
I want to, yeah, but I'm not quite sure that I understand the question. So basically, you're going to report the number of hours actually worked, and that absolutely has to be, so in the timesheet, represent absolutely what has been worked on the action. The calculated hours in some months, it's not. Sorin, do you see what I mean?
Yes. Maybe I can try to step in. Okay, so the number of hours worked. So when you calculate the personnel cost, you use the same formula basically to say personnel cost equals number of hours worked on the action multiplied by the hourly rate calculated for that person. Now, the number of hours worked in the action obviously should be the actual number of hours worked in the action. So basically what you have indicated in the timesheet as being hours worked for project of the EU or the audited project. If in the hourly rate calculation, you need to calculate this person and to basically put at the upper side numerator the gross salary and social contributions, and divide this by the number of productive hours. I assume that when you say calculated hours, you mean productive hours. I don't see what else could be. So if you mean productive hours, that is okay. So as long as the number of productive hours is calculated correctly using one of the 3 options, even if the person worked, for example, let's take a small example, try to make it more clear for the sake of clarity. If you use option 1, 1,720 hours, and you have basically, I think it's around 150, I will round it, hours per month, if you divide it by 12. If one person works 80 hours for the EU project, then there is no problem if the person works 80 hours, but you will calculate the hourly rate based on 150 hours, which is basically by applying the number of productive hours. This is a calculation, of course, per year. I'm looking only at the month in particular, but overall for the year, you may have indeed less number of hours. This may be due to the fact that the person works in other projects or other internal projects, but also the other way around, it's possible in the sense that if the person, for some reasons, there were no holidays and so on, worked more hours in one month, but then less hours in another month, this is, let's say, overall on a yearly basis, should be compensated. And what we look at from an audit perspective, it's this so-called double ceiling, which is to say that you don't declare more hours, so hours actually worked on the project, than the number of productive hours. basically to say the other way around, that you don't claim, let's say, fictive cost, basically. So you don't claim more hours than the number of productive hours. Thank you.
And just to add, thanks, Sorine, for this explanation. When you are looking at the ceiling, indeed, you look at it at the level of the year. So if you are in a monthly calculation of the hourly rate, there can be discrepancies from one month to the other, but then we will check the ceiling for the year.
Thank you both. Next question is what happens if the actual hours work on the timesheet are significant? Oh, that's the same, sorry. In the absence of timesheets, can the alternative evidence lead to positive adjustment, more hours spent than declared, or only the declared hours can be accepted?
Maybe I can start with this one and Isabel can complement later. So in the absence of timesheet, which we will really recommend not to arrive to that situation, and I will explain why from an auditor's perspective. We do recommend for you to have timesheets, for you to claim the cost, the actual cost in the absence of timesheets. Then we will, as indicated also in the audit program, but according to our procedures, we will start the other way around. Basically, we will try to see with alternative, so to ask alternative evidence, and to see with this alternative evidence what hours we can validate. So it's the other way around. We'll start from zero and not from 100%. We start from zero, trying to add, let's say, hours that could respect some of the conditions that we have in our procedures and that are also detailed, if I'm not mistaken, in the annotated grant agreement. So this alternative evidence, should meet 3 types of conditions. The name of the person, I think, should be mentioned, the number of hours worked on the action, and I think there's a third one. Okay, you can find it.
One is the link to the time spent. You need to know to be able to quantify the time.
Indeed. Thank you very much, Isabel. So that's basically, it will be difficult to say that we may arrive to more. From my own experience, that's rarely the case. Basically, the point of the further analysis on alternative evidence is to try to validate as much hours as possible based on alternative evidence. But what we can see from practice is that we receive not so much alternative evidence that could meet these 3 criteria to validate some time, some cost. Yeah.
And I can only concur with Sorine that it's very difficult when you do not have a reliable timesheets and we have to go to alternative evidence to find documents or evidence that will identify the person, the work that's been doing, for work done on the action, and quantifying the time spent. Because you will see that in practice, if you have, for example, exchange of emails, maybe that will show that you have been working on something, but we will have the number of hours. And if you have minutes of a meeting, that can be perhaps one aspect, but it will only be for the time of the meeting. So in practice, when you fall to alternative evidence, usually you manage to demonstrate a very low number of hours.
Thank you both. The next question is a repeated one. We have already answered that. So we go to the one immediately after. Are special payments for instance, Christmas bonus also included in the calculation of the personnel costs?
So indeed, this type of bonuses that are part of the remuneration that are in line with your legislation, applicable collective labor agreement or an employment contract, and which are based on objective conditions, which means we can determine in advance, for example, written in your internal rules, can be included in the calculation of the personal costs. So when you're calculating your hourly rate per year, when you include it in the actual personal costs for the year. And when you are using a monthly calculation of the hourly rate, then you just have to be careful that you can only include in the actual cost of the month the amount of this bonus generated for the month. So you don't apply the whole bonus in the month where it was paid, but only an allocation per month of the whole bonus.
Thank you. For the next question, do we have to calculate the personnel costs per person involved in the project, or can we calculate one only cost, which is an average of the different costs?
I can,
Yep, go
I can
ahead.
jump in for this one, Isabel. Thank you. So here you can do both. If you calculate 1 hourly rate per person, then you are in this form of cost, which is prescribed in the grant agreement as being actual personnel cost. Basically, you are expected to calculate an hourly rate per person, an individual hourly rate per person. There is this other possibility, what we call also in practice average personnel cost, or based on unit cost, for which you need to fulfill certain conditions, like to have this methodology consistently applied, independently of the source of funding and so on. The conditions are clarified in the grant agreement and in the annotated grant agreement. But if you use this average personnel cost methodology in accordance with your usual cost accounting practices, then of course you can calculate one average hourly rate, I will call it, to make it more clear, per category of cost. So it should be per category of cost, where the category would be composed of obviously similar type of personnel. And this is possible, of course, and there are certain conditions to be fulfilled. I invite you to go to the grant agreement of where average personnel cost is indicated.
Thank you very much. Next question. There was a problem there with the reduction, but if an employee in the closing year was paid as PhD and for the new year is a postdoc, I understand. What kind of hourly rate should we use for the PhD or the postdoc salary in the new year?
So I'm going to try that, but Sorini will let me know. First of all, I think that if it's not considered in the ongoing year as a new employee and it's just a continuation of the contract, then you would have to use the last closed financial year, which means the rate that it had as a PhD in the last year, for which you had the full figures for a full financial year. And I will also recall that for PhDs, you can include you can declare the cost for a PhD, notably in the case where they're not under an employment contract. If the personal costs, if the PhD and the contract is work oriented and not oriented towards the training of the PhD. Also, if the contract and remuneration is in line with the national legislation, and that the tasks that are allocated to the PhD are also appropriate and in line with this legislation.
Thank you, Isabel. I would just try to add also that indeed, I think, but maybe we can be prudent and ask the beneficiary in question to send us the question through the research inquiry service in case they would like to be sure of because from the question it's not very clear how to reply. But I think the key point here is to see whether there is really a change of the contractual relationship between the beneficiary and the PhD / postdoc later on, in which case indeed they could, I say could prudently, use the new hourly rate of postdoc for the next year. But this needs to be clarified. So the prudent approach would be to obviously to use the last closed financial year, meaning the hourly rate of the PhD before. So yeah, I hope this clarifies. Thank you.
Thank you, Sorin, Isabel. So the next question, Horizon follows the calendar year and not the last closed financial year. Can salary rate be different for the same person in running H2020 and Horizon Europe projects?
I think that there you will have to in the framework of this webinar, I think we will keep to the idea that each program has its own rules. So you will definitely have to make a calculation for the person per financial year for Horizon 2020 based on an hourly rate, and then you will have to make a calculation under Horizon Europe based on a daily rate. And what we recommend under Horizon Europe is you do the calculation for over the reporting period. So I think you will have to do the two calculations, and in any case you will have an hourly rate in Horizon 2020 and a daily rate under Horizon Europe.
Thank you. Next question. How do you exactly calculate the hourly rate for part-time employees or employees who just worked for some month during the year, for instance, June to December?
So I will take the example of the case if you've chosen the option 1 for the number of annual productive hours, which is the fixed number, 1,720 hours of annual productive hours, and then you prorate this number. So you calculate the proportion. So if the person worked, for example, half of the year, you will use the half of the number of annual productive hours. So that would be 860 hours. And similarly, if the person is worked the whole year, but has in its contract indicated clearly that it is a part-time worker, let's say for 50%, so work the full year, but 50% over the full year, you do similarly a proration of the number of annual productive hours, and it's again half of the annual productive hours, so again 860 hours.
Thank you very much. Next question. Is the person already employed in the institution who has an employee contract obligated to sign another contract for his or her engaging in this project team?
So that's absolutely not a requirement. So there the person who has an employment contract can continue under this employment contract. Maybe this question is related to the condition that we say that personal cost is for a person who is assigned to the action. So here it can be indicated. One possibility is under a contract, but if the person already had a contract, they can be in one of the internal communications of the company that this person is going to be assigned to the action. Another possibility is that the timesheets can be another element indicating that the person was assigned to the action, unless we find another piece of evidence that would go against this indication.
Thank you very much.
Just to add also something, sorry, I just intervened, but thank you. Just to add also on this that what we look at is the actual figures claimed and the actual involvement of the person. So even if, a person would be supposed to work through a contract in the action, for us this is not sufficient to consider that the person really worked in the action. So basically, we can make the parallelism between budgeted figures and actual figures. So it's not because in a contract, which is the budgeted figures, we would say that you will be supposed to, that you really worked. So I would pay attention from an audit perspective, of course, to the fact that the person really should work in the action and then claim his time in his timesheets the real number of hours worked for the action. But this doesn't mean that in his contract action should be mentioned, or that this is, I think, part of the beneficiary's internal rules, and they will manage as they consider properly. But for an audit check, I would say what is the most important is to really see that in the timesheets the person worked for the action. Okay.
Thank you, Sorin. You are welcome to interrupt anytime. How can overtime be proven?
I think this is for Sorin.
Yes. Yes, I can tap in here. The overtime, what we see in practice is that normally, there could be two types of overtime, paid and not paid. I assume the question refers more to paid overtime, because unpaid overtime, will not really affect very much the calculations. for the paid overtime, the basic requirement for the entity itself, for the legal entity, for the beneficiary, would be that they have to have some legal grounds to pay this overtime, obviously. This, we can see it often in the work contracts or in the labor agreements or in the internal procedures of the beneficiaries. So that would be one step. Then this element would be needed also for calculation, depending on the type or the method of productive hours used by beneficiaries. This can be used for the calculation of should be used for the calculation of productive hours, especially for option 2 and 3. So I'm not talking about option 1, the fixed number 1,720. I'm talking now about the option 2 and 3, actual individual and standard productive hours, in the sense that the number of workable hours will be increased with the overtime worked or to be worked by the beneficiary, by employees. And in the timesheets also, this overtime will also be claimed, obviously, as number of hours worked for the action. This is in order to be fair in the calculation that we take the hours both in the numerator and denominator in the calculation of the hourly rate. I hope I clarified the question. Thank you.
Thank you, Sorin. So we can go to the next question. I think we had something similar before. How should we calculate hourly rate for a new employee who has started in the middle of the financial year? Do you want to add something there?
Yeah, so I will understand that this question is about a new employee in the ongoing financial year. If it's in the last financial year, then it's just a matter of how you calculate the annual productive hours and may need to prorate the fixed number of annual productive hours to adapt it to the period during which the person was employed. But if it's in the ongoing financial year that the person was hired, then this is an exception to the rule that you have to use the figures of the last closed financial year, and there indeed you will use the figures for this employee of the ongoing financial year, with meaning the actual cost that you paid during the last months of the reporting period for which you're doing the calculation. And you have to also be careful of prorating the annual productive hours to the period during which the person was employed.
Thank you very much. The next question is, are we going to talk about the declaration on exclusive work for the action, and if it's possible to have them filled out retroactively?
So the declaration on exclusive work for the action is a way to demonstrate the number of hours that you worked on the action. So it's an alternative to the use of timesheets. And you have to know the conditions to use this, because there are several. So first, you can only use it for a person who really exclusively works on the action. So he works on no other project, who is not doing other important trainings or things like that. So really only working on the action. Also, you can only use one declaration per reporting period, and the duration of this declaration must cover at least one full calendar month. So which means that as you can only use one per reporting period, and it also must cover an uninterrupted period, it's only suitable for a person who's going to have this stable work pattern of working exclusively on the action for a long period, ideally the whole reporting period. If you have a person who has a changing working pattern, working sometimes exclusively on the action, sometimes on other projects, it's much safer to go for time records, because indeed, if you realize at one moment in the reporting period that the person is no longer working exclusively on the action, and then you should be using timesheets, you have to do that at the right moment, because normally you can't do things retroactively, notably in the case of timesheets. That's something that you have to sign monthly and that cannot be done retroactively. For the declaration on exclusive work, you usually also have to do it at the time when it's working, and then depending on the situation, maybe in some instances we have to see in practice. But it's better to think in advance in regard of the work pattern of the person, if you're going to be in a safe situation to use the declaration, or if this person is not going to work all the time exclusively on the action, go to timesheets for the safer option.
Thank you very much.
Yes, sure.
To add also on this, I would say please don't wait for an audit to come in order to sign these declarations. Your obligations from the grant agreement should be that you should sign them as soon as the period finished and you're sure about the exclusive work. So just as a prudent approach, I would really advise the beneficiaries not to wait for an audit to have the signature on this document. The signature means that the document is indeed authentic and we can use it as a proof for the audit. Thank you.
Thank you, Sorin. So we have about 30 minutes left now, unless there are no questions, so we will close earlier. Let's see, the next question is, our team is composed of own personnel and personnel contracted through a third party indistinctly. How can we declare the latter, personnel or service?
So the latter, I understand, is the personnel contracted through a third party. Presumably, contracted through a third party means that it will not fall under the personal cost for a natural person having a direct contract with the beneficiary, and presumably will be rather something like purchase of costs or subcontracting, depending whether this third party is only providing the personnel but without carrying out an action task, then it's purchase of costs, or if this third party is in charge of tasks in the action, and then it could be subcontracting.
Thank you. We have a similar question now. If one employee of a third-party beneficiary is directly employed by the beneficiary, where should be declared its costs in the reporting? Under which category?
So I would like to see the question again, if possible. Okay, super. An employee of a third party's beneficiary is directly employed by the beneficiary. So I'm not exactly sure where the person, who is the employer of the person. If the employer is the beneficiary, then the costs should be declared. Its costs, where the costs should be in the accounts of the beneficiary, for sure. Where should be declared its costs in the reporting? Which category? I will try to. Really, please go ahead.
I can try to step in, Isabel. I understand here that we are talking about a third party, so a third party's beneficiary. So maybe this has to do, but if this is not the case, please send a question to the Research Inquiry Service. But I understand here we are talking about one beneficiary in the grant, and then a third party to a beneficiary which declares his own cost through a financial statement. Now, if this third party has employees, they will declare the cost of the employees of the third party as personal cost. So they will follow the same rules as the beneficiary, the same eligibility rules. If the person in question is an employee, then they will declare under section A1. If it is seconded in-kind contribution, then they will have to follow the same rules as the beneficiary. So whether we're talking about the beneficiary or a third party, the cost should be declared under the same eligibility rules. Anyway, what we look at from an audit perspective is with whom the beneficiary has a contract, an employment contract, and then this is the entity which, let's say, should be normally the beneficiary or the third party that we are auditing, the ODT. If this is not the ODT, then we try to then go through all the possibilities that were mentioned before by Isabel, Article 6283, with so-called persons working under direct contract, subcontracting if it's about action task, in-kind contribution, Article 11 to 12, depending on against payment or not. Yeah, I hope I covered everything. Thank you.
Thank you. So the next question, how to reconcile the estimated person-month effort with the actual declared hours? What if the effort is finally distributed differently than planned?
So I think you have to really keep in mind that there are two different aspects. The person months are not relevant for the declaration of your personal costs. For the personal costs, you're going to declare the hours that would really worked by the person who worked on the action, and according to the hourly rate calculated in accordance with the formulas in the grant agreement. Now, when it comes to your technical report and the use of resources in there, you will indicate indeed the person months. Calculated according to your usual practices. We don't have any rules on how you calculate the person months. If there are deviations compared to what you had estimated, you have to explain it in this report. But it doesn't have, as long as what you declare under personal cost is the reality, and then you explain in your use of resources why there are deviations, there's no other consequence than that. You just have to explain the deviations, and what you report as cost has to be the actual reality.
Thank you. We can go now to the next question. With the option standard, parental leave is deducted from the annual productive hours, and they must be not less than 90% of the annual workable hours. Is that right?
I will start, but then we'll see. For the check of the amount of the number of standard annual productive hours, you have to do that according to, this number is according to your usual practices. So you will have a number irrespective of parental leave that one person may take. And this level of your standard number of annual productive hours per year, we will make this check that it's not less than 90% of the workable hours. And then if this check is good and you are above and we are using then your standard, then you can deduct parental leave for one person. Then Sorine, please confirm if that sounds correct.
I confirm that sounds correct indeed. To say it otherwise, first we check, so the standard productive hours that are calculated at the level of a cost category of staff. So it's not for one staff in particular. And we first check indeed the 90% rule between productive hours and workable hours. And then for particular persons, indeed, if they have in their calculation of their hourly rate, if they have they took parental leave, the hourly rate will have to take into account the parental leave. So the 90% and the parental leave deductions are done in two different steps. Thank you.
Thank you very much. So the next question, can parental leave be deducted if we use monthly method to calculate hourly rates? Please explain how the calculation should look like.
So when you are calculating your hourly rate per month, you don't deduct from the number of monthly productive hours time spent on parental leave. This is a difference with the calculation of the hourly rate per year. So the parental leave will not be taken into consideration at the level of the number of productive hours. It will be done differently. So what you can do differently when you're using the monthly calculation of the hourly rate to take into consideration parental leave is that you can add on top of the cost that you're going to declare a proportion of the cost that you actually incurred for the parental leave. You can add them in addition to your whole calculation of the personal costs. And I will try to explain how you do in practice. You have to take into consideration the cost actually incurred during the parental leave, which means the costs which are mandatory under your legislation that the beneficiary actually incurred and which was not reimbursed by any authority, social services or other. And then you calculate a proportion of this amount that you paid during the parental leave compared to the time that the person worked in the action during that year. This will give you have to have a percentage, you obtain a percentage of the person that the person worked on the action during that year, and you apply this percentage to the costs that you actually incurred for payments of salary during the parental leave. I'm not sure that was absolutely clear, but that's the idea, and it's explained with an example in the annotated model grant agreement, because this is a very technical part of how to apply to be able to contribute to the parental leave when you have this calculation of the hourly rate per month.
I would say also,
sure.
Yeah,
please,
I would say also that this is so specific and technical that maybe I would recommend to send it to the Research Inquiry Service just to be sure that we really understood your question with some more details in case this was not very clear. After you will check, of course, the examples from the annotated grant agreement as well. Thank you.
Thank you so much, Sorin and Isabel. So another one about the parental leave. With option 3, the employee has parental leave from February. Do I really have to use the 90% rule?
I think we have already explained in the last reply that you apply the 90% check, and that your standard number of annual productive hours is at least 90% of the workable hours. You do this check before applying for one specific person a deduction of the time spent in parental leave.
Thank you. Next question. Would you say that the declaration on exclusive work for the action is possible to use for PhD students in Marie Sklodowska-Curie action projects?
For that one, actually, I would also prefer to ask that this sent to the Research Inquiry Service. I think today we are covering more generally the general model grant agreement for research and innovation actions and coordination and support actions. For Marie Sklodowska-Curie actions is sometimes specific, and I think it's better to treat it differently in the Research and Inquiry Service.
And here there is another question also about another program. Are the cost declaration rules for AGRIP Multi the same as Horizon 2020? Probably they have to go also to the
Yes,
rest.
absolutely, especially in the previous multi-annual framework programs. In general, each program has its own rules, so really have to see and actually inquire with this program which are their rules.
Thank you. And we have now a question from Alexander in Berlin. Are the personnel costs limited to salaries according to national collective labor agreements?
So I think it was explained during the presentation that it's salaries as well as, so when we talk about the numerator, when you're doing the actual personal cost for the year, salaries, social contributions paid by the employer and employee, and taxes included in the remuneration. So it's the whole pot of what is paid in accordance with your national legislation, collective labor agreements, and the employment contract.
Thank you. The next question, I think, is referring to Horizon Europe. I don't know if you want to give it a try or to leave it. With other EU projects, the method imposes 215 days. In Belgium, contracts of 38 hours per week make 7.6 hours a day, 1634 hours, not 1720. Will 1634 be accepted?
So I will address this in the perspective of Horizon 2020, so where we are in an hourly rate, and it depends on the option that you will use for your annual productive hours under Horizon 2020. We offer the first option, which is the simpler one, which is a fixed number of 1,720 hours. So there, if you use this option, this will be the number that will be applied for the calculation of your hourly rate, and there's no change to that if you use this option. Then if you use the other two options, the individual annual productive hours or the standard ones, what is applied in practice in your organization will be further taken into consideration, but these options are more complex to handle. So as we explained, there's the simpler option or the ones that sticks more to your numbers, but they come with additional complexity.
Thank you. And the next one, can a self-employed person be an in-house consultant even if they have a legal entity, sole proprietorship of a limited liability company for their activity?
So we have touched upon this, saying that an in-house consultant can, the cost for the in-house consultant can be the personal cost under the specific category, which is the cost for a natural person that has a direct contract with the beneficiary. So here the question is to know whether it's a direct contract or if in the middle you have the legal entity of which the in-house consultant is the sole owner. So in this case, what you have to see is if the company or maybe it's a one-person company has its own legal personality. If it's a legal entity separate from the natural person, then it cannot be a direct contract, and then it doesn't fall under this special category of personal cost for in-house consultants, and it's more likely to fall under purchase costs or subcontracting. But if the company, the one-person company, does not have a legal personality, is not considered as a legal entity separate for the natural person, then we can consider that the contract is directly between the natural person and the beneficiary, and it could fall under the specific cost category for in-house consultants, provided that the other conditions apply, notably that this person, then this in-house consultant, is working under similar conditions as the other employees of the beneficiary.
Thank you. Next question, can we use a salary grid per profile to determine the annual remuneration? This is usual cost accountant's practice to recharge staff costs to projects.
Yes, please, Sorin.
Yeah, thank you, Isabelle. Depending on the method used by the beneficiary to declare the cost, I would say, first of all, if the beneficiary declares cost based on actual cost, obviously the beneficiary needs to use an hourly rate, an individual hourly rate per person, which should be the actual one. So in case in an audit we find that this hourly rate is, we call it budgeted or estimated based on salary grids, we will have to recalculate this cost based on the actual cost. So this is not okay. In case the beneficiary uses the so-called average personal cost or unit cost to declare the cost, in that case, they calculate an hourly rate for a category of cost. What is allowed under the rules is that, so basically in practice, the calculation would be the brute salary plus the social charges of one category of cost or of all the persons in that category. We're taking the actual brute salary, the actual social charges, and divided by the productive hours of the full of all the full-time equivalents in that category. What is allowed, so we expect also there to have actual cost of both the numerator and denominator, and to calculate the hourly rate for that category based on actual cost. What could be allowed by the rules is that these actual costs are calculated based on historical data, basically on the actual data of the previous year, and then let's say updated or a coefficient of index, price index, or usually around 1%, that is added to the calculation in order to have an hourly rate for that category for the new year. In that case, indeed, this could be possible to not to use salary grids again, but to use the actual cost calculated for that category of cost in previous year, plus small adaptation estimation budgeted element included based on let's say auditable elements like price index, like expected price index and things like that. Thank you.
Thank you very much. We have about 10 minutes now left. What happens if the person has not worked in the year before?
So I guess this question is about the situation where the beneficiary needs to use the hourly rate of the last closed financial year. And if the person has not worked during that year, as it said in the name, you're going to use the figures of the year of the last closed year where you had amounts for this person. So you would have to go to the year before where the person was working to have an hourly rate with full figures for a whole financial year, and then apply them to the ongoing year, if this is the case that your reporting period has a few months in the ongoing year and you have to use the last closed financial year.
Thank you. Next question is about special cases, SMEs. Can the owner with no salary be self-contracted as consultant or service by herself?
So in the case of a small and medium enterprise and the owner, this is a specific case where the owner receives a salary stemming from an employment contract, then the amounts will be calculated under the category of employee according to the rules of an employee, but under an employment contract. When the SME owner does not receive a salary stemming from an employment contract and then receives a remuneration from any other type of contract than an employment contract, including a service contract, it will be considered as an SME owner that does not receive a salary, and in this case we apply a specific unit cost fixed by the Commission that applies for the work done by the owner of an SME, which is the beneficiary in the grant agreement. And so you cannot use, in conclusion to answer this, you cannot use the figures that are coming directly out of your service contract. A service contract is not an employment contract, so then the SME owner will fall under the unit cost for SME owners.
Thank you. Next question. When would it be a better time to ask reporting and technicalities related questions? Any past webinars on these topics? I think for very technical questions it's better to inquire the Research Inquiry Service directly, and then it will go to the lawyers or the auditors depending on who has to answer them. And about webinars, this is the 13th webinar we are doing in reporting errors in Horizon 2020. So you can always go back in the Funding and Tenders portal, you can always go back under events to the previous webinars. And there the presentations are basically the same, or sometimes exactly the same. But if you check the questions, the questions may change actually from one webinar to another. So it's also a good point. In addition, in this page of events, there are many other events that are recorded there, so you can always find something that is of your interest. We can go to the next question. Part of a PR falls short 1 month of closing the running economic year. Can we correct later for the months that fall in said year with that year's data?
So I understand this is the situation where the reporting period, understand that PR is for reporting period, is closing 1 month before you will have the full figures for the full financial year. In that case, we consider that you need to have the figures for the full financial year at the moment when the reporting period closes. So if you don't have these figures when it closes, you have to use the figures of the last closed financial year. And when you do this and you have to use the situation where you have to use the last closed financial year, you cannot make an adjustment later to use the figures of the ongoing year when you would have the full figure. You have to stick to the figures that you had at the moment when the reporting period closed, and if at that moment you didn't have the full figures, it's the figures of the last closed financial year that apply.
The next question: can someone who's already employed on the project be a beneficiary, as a consultant, one-person company, be employed by another beneficiary in the same project?
I think, yeah, if it's in the case of a natural person with a direct contract with one beneficiary, so one beneficiary would be declaring personal cost for this person, and the same consultant has a direct contract with another beneficiary, the other beneficiary could also report personal cost for this person, then you always have to be careful to avoid double funding, which means that the same cost cannot be funded twice by the EU budget, and notably in the same any part of the EU budget. But there we'd have to be careful that in the same action, we're not paying twice for the same work done by this consultant.
Thank you. I see in Slido that we have 3 last questions. How to count the month if someone has started working in the middle of the month or 1 week after the start of the month?
It's done by proration. You declare the number of hours really one work in the month, so it will be normally half the hours of a month. And for the number of productive hours, well, if it's per month, if it's per year, then you will make the proration of the amount of annual productive hours, considering that one of the month is not complete. And also, I must say that if you're using the calculation of the hourly rate per month, no, it's okay. You will do also the proration of the productive hours per month. That's fine for me. Yeah.
Thank you. Next question. NL owners, small companies working in action tasks declare personnel costs as a kind contribution, secondment, via holdings owned by them too. Is that okay?
So I think there's a lot of information that is not very easy to establish in the question. For in-kind contribution, so you're going to be seconding, for that to fall under in-kind contribution, seconded personnel to a beneficiary. The company who is seconding the person has to be is a third party to a beneficiary in the grant agreement. It's possible that they have a capital link between the two. Then still the beneficiary. Then we have to see if the in-kind contribution is against payment or not. Depending on that, it will have an incidence on the category of personal costs under which you would be declaring it, because if it's an in-kind contribution for free, which means that the beneficiary is not reimbursing the third party for this secondment, it could be declared by the beneficiary under its own personal cost, so as in the category for employees, whereas if it's an in-kind contribution against payment, meaning that the beneficiary is reimbursing the third party, so it could fall under the seconded persons against payment, which is the category 62A3. In both cases, the beneficiary could only declare up to the costs really incurred by the third party. And in both cases, in-kind contributions have an additional eligibility condition, which is that the in-kind contribution must be indicated in the Annex 1 of the grant agreement.
I would also add here that for SME owners, the recommendation would be that do not receive a salary under an employment contract, independently of how they work in the contract. The recommendation would be to claim the Marie Sklodowska-Curie rates, because if you have other type of service contracts, then this will fall under, let's say, Marie Sklodowska-Curie rates to be claimed. So, yeah, I would be prudent to really claim the cost of SME owners as under Madislow-Dossacheri rate.
Thank you, Sorin. Can all personnel costs of a beneficiary be secondments with no own staff costs?
Well, I would say the problem here is that you have to keep in mind that a beneficiary must have adequate resources, their own resources, and that's in Article 8 of the grant agreement. So normally the use of third parties is an exception to the fact that the beneficiary should have its own resources. Then, having said that, the practice, it can happen that a beneficiary will have part or a certain part of the personnel as seconded personnel. But usually we would see this as an exception, and normally if a beneficiary participates in the action, it's because it has something to provide for the action by itself and not only using external third parties.
Thank you so much. And we had a very last minute question, and I see that it's increasing, so that's really the last question. Can the hourly rate change during project lifetime for one person?
The calculation, you're going to have the calculation of your hourly rate, that's going to be per full financial year, or you do it per month. So depending on that, you're going to include in your calculation everything that happens during the period covered. So if you're doing a calculation of an hourly rate per year, the person may have had a certain amount of salary for the first month of the year and then an increased salary for the last part of the year. But when you're going to do the calculation of the hourly rate for this full financial year, you're going to put all the personal costs together and you're going to divide by all the annual productive hours. So this is going to take into consideration the evolution that may have been in the actual cost for the hourly rate, but you will have one hourly rate for the whole year, and then in the next year you will recalculate, when you have the full figures of this year, an hourly rate. So in this sense you don't change the hourly rate, but the hourly rate takes into consideration evolutions. And then you do the same for the monthly calculation of the hourly rate, if this is the option that you have chosen. The only difference there is that if you have a change in the for example, salary level, you will see it the impact more quicker in the next calculation of the monthly hourly rate, because when you have a monthly calculation of the hourly rate, you do this calculation every month for each person.
Thank you so much. I think we have to close now. I want to thank Isabelle Leroy and David Mejuto from the lawyers from the legal unit, and also for Sorin Servan from the audit unit. In addition, we had several persons helping us here. One is Dominika Kotowicz. She was managing the Slido questions. Thank you very much. And here in the studio, we have the help of two technicians, Olivier Margan on the video side and Eugene Noue on the sound side. And that's all from my side. Remember that this session is recorded. The presentations are already there. The recording will be there immediately after these sessions. And there are the links all over about the annotated model grant agreement and all kinds of supporting documents. Thank you so much for attending, and hope to see you in the next session. Bye. Have a nice day.
Bye.
Bye-bye.